Welcome back to Morning Trade Live. Time now to go inside out on some of this morning's earnings. Joining us now with Paul McCarthy, president of Kisco Capital. Paul, thank you so much for joining us this morning. Let's start with Accenture. Shares are up off the back of their latest results. What stood out to you in their latest quarterly numbers?
Basically, it's, the AI story kind of filtering into, what is a very large consulting company. They're in about 120 different countries. So so the narrative here is that their Fortune 500 customer base is going to help drive their AI business. And I think that they're trying to carve out their own ecosystem. And in the report today, they did say that they are showing more than 900 million in bookings from generative AI and about 2 billion year to date. So about a year ago, they started to recognize AI as something that they needed to get involved with. And they said that they were going to invest about $3 billion into this part of their business, and it's starting to pay dividends, as we saw today from some of the bookings that they're seeing. And there's been a bit of a negative narrative around the company, as there was concern that maybe AI would replace some of the face-to-face consulting that they do with their customer base. So I think that they made a good decision about a year ago, and we're starting to see that that is probably going to be more and more of their business, and that's something that they're trying to emphasize more, I think, going down the road.
Was there anything that stood out to you? Because, yes, the CEO talked about Gen AI being a catalyst for them. And I noticed that pivot to more of a focus on AI last year for Accenture. Was there anything else that stood out to you that serves as a potential headwind for Accenture, especially since it's playing catch up?
Well, maybe just that. Maybe they're behind, in terms of, implementing this new part of their business. But, I think that, to me, the biggest headwind is looking at the stock chart. I think that they're having a nice pop this morning, but there's probably more downside, I think, in the stock to kind of complete a longer term correction. But, I think the longer term outlook is positive for the company. I wouldn't say that I see anything specific that there is an issue. I think they're kind of in the prove it mode. With this new business, it's off to a good start. If it does falter or sort of fall behind their own projections over the next couple quarters, then, that would be, a headwind. So it's really, they made a good first step. As to whether they can follow through and execute. That's sort of the question mark that I would have in my mind.
What else besides this kind of growth in Gen AI could serve as a potential growth driver for Accenture?
Their business is very widespread. They're really in a lot of different sectors. And I think that, looking at if they really do execute, they really could have a good foothold in the AI sector. So like I said, most of their customers are large cap companies that maybe don't have a foothold in AI and need help from someone like Accenture to sort of like build out maybe some of the software engineering. They're involved in cloud. They're working with Salesforce on some of their life and sciences divisions. So they have their fingers in a lot of different areas. So I think that there is a lot of, potential positivity that might come. I think like I said, I think that they probably have to work through the next few quarters to kind of like prove that out. But I really think that the rest of the business is kind of stable. So as long as they don't drop the ball on, moving forward with the AI program, I think that's probably going to be a bigger part of their business going forward.
All right, Paul, let's put a pin in that just for a minute. Stay with us, because I know we want to come back to you to talk another company. First up, we want to bring in Tom White to trade Accenture. Tom, what are you seeing in the options market when it comes to Accenture?
Well, we've seen implied volatility levels get crushed post earnings, and it's not only because the event risk is gone, it's because the stock's up 5%. Post results. So I looked at it that way, where maybe it gives you some opportunities. I looked at an option strategy here that gives me some duration where I don't have to rely on maybe short-term moves in the near term. There was a good base at $280 over the past few weeks. That seems to be set in place. So if you think this thing is going to rally, what type of option strategy works to the upside where you can offset some of your costs? So I looked at a skewed or broken wing butterfly to the upside. I went out to the August monthly cycle, so 57 days till expiration on this position, where I'm going to buy one of the 305 strike calls, sell two of the 330 strike calls, and then offsetting that by buying one of the 335 strike calls. So in essence, I'm buying basically a $25 wide bullish call vertical, offsetting some of the costs by a short $5 wide call vertical with that same common strike at the 330 level. You're paying a debit. I've got here a $9 debit on this risk profile. It's probably closer to $7 because the stock has pulled back from when I looked at it earlier. But that debit that you pay for this is going to be your risk on it. And you can see from the risk profile, if you pay $9, it takes your break even to $314 over the next 2 months. That's only about 3.5% above the current share price in Accenture. So giving myself duration, taking advantage of that lower implied volatility while offsetting some costs by doing the skewed or broken wing butterfly to the upside.
All right, let's pivot now and talk. I want to bring Paul back in, Tom. Thank you for that. Let's bring Paul back in to talk Darden Restaurants. We had some mixed numbers from Darden in terms of its latest quarter. EPS was $2.65 a share. That was on an adjusted basis. Revenue came in at $2.96 billion. The stock, though, is up a little bit. Let's talk about your takeaways first. What were your takeaways from its numbers, Paul?
Sort of a muted outlook, but they're having a steady rise in revenues. Their inflation costs seem to be stabilizing, which should help their margins. I think their sales were up like 6.8%, and they added, about 80 Ruth's Chris Steakhouse and 37 other units, so they grew over 100 units. So I think that, they're steadily adding. They added a new concept. Over the next year, they're projecting to add 45 to 50 units, so that's a little bit lower than what we've seen over the past year. Capital spending about $500 million. They see inflation around 3%, but same-store sales growth is going to be 1 to 2%. So, sort of a steady eddy. They did increase their dividend to $1.40, which is a nice 7% increase. So, and they have about $900 million left on the repurchase program. So, the financials look okay. It's sort of a dividend play at this point. The stock price has kind of been stagnant and holding below a 165 level on the longer term charts. So it's sort of been more of a dividend play. And, post-COVID, I think they've stabilized their business. They did suspend their dividend during COVID, so they've implemented that. They have, back to the AI story, they're trying to implement AI to aim at forecasting guest counts, time management systems, reservation systems, so on and so forth. But I think they really probably have to contend with, how consumers are going to use their dollars, and that they have to, provide a good product for them to keep going to their stores. So sort of like I said, a steady eddy kind of on the financial front. They're projecting very modest growth below inflation, but the dividend is attractive here.
But let's talk a little bit about one of their weaker verticals. Yes, net sales overall rose 6.8%. You were right on that number. But Olive Garden same-store sales fell 1.5%. What does that tell you about the state of the consumer?
Yeah, Olive Garden's about 45% of the revenues. So I think, Olive Garden's been around a long time. I don't know if that's, it's certainly not the most progressive concept out there. So I think one of the reasons that they went to buy something like Ruth's Chris, because it's a higher ticket price, and, customers that spend a higher ticket price are probably less price sensitive. So I think that they're sort of like moving some of their concepts around, maybe less away from an Olive Garden, which is more of an affordable meal, which maybe you want to make at home, as opposed to something that's a little bit more high ticket. So But I mean, Olive Garden is a good, barometer of the consumer. That looks like a concept that is going to be really tough to grow on same-store sales. I think they have to provide something new, which is why their Longhorn Steakhouse has been doing well, and they'll probably look to new concepts.
Yeah, Longhorn saw same-store sales rise. I think the number was 4% for Longhorn. So there was certainly strength there. And great. I mean, I guess the unlimited breads. I don't even know if they still do unlimited breadsticks. I guess that's not pulling the people in like they used to for Olive Garden. What else stood out to you? Let's talk a little bit about their fine dining here at near the Stock Exchange. There's Capitol Grill that recently reopened. What were your takeaways from their fine dining segment?
Yeah, I mean, you're probably seeing, business spending come back, people going out to dinners with clients. And so they're probably, I would think that is sort of a post-COVID trend that will continue. I think that when people go out now, they probably, want to maybe go to a nicer place rather than, a fast casual or something like that. So it seems as though they're being a lot more targeted, and I think that's probably the right way to go. And now that they've, sort of, seen labor costs stabilize, I think that allows them to maybe work on or be even more confident of their margins as well. So, but I think, sort of business spending might be picking up, which is why they're going for the higher ticket restaurants.
Shares of Darden up just shy of 1% there. Paul McCarthy, President Kisco Capital. Thank you, Paul.
Thank you, Diane.
All right, we want to bring, you got it. Let's bring Tom back in. Tom, all right, let's talk Darden and